Oh, the drama. There has been more drama about mortgages in the last 2 weeks than I have seen in quite some time. Let's get into it. Last week, we talked about Fannie Mae dropping the 620 minimum credit score, which I made a video on that. But this week, or in the last week and a half, it's been 50-year mortgages and portable mortgages. Let's talk about 50-year mortgages. So a 50-year mortgage is a lot longer than a 30-year mortgage, and I can bet you none of you are going to stay in that home for 50 years. But here's the thing. Most people now don't stay in one home as long as they used to. People used to buy homes and stay in them until their kids left college, until they needed something smaller and they downsized. Now people move more often due to jobs or anything else like that. They want to be closer to their kids, so they move to where their kids are going to college. It takes longer with a 50-year mortgage to earn equity, to build up that equity in your home, because at the beginning of a mortgage, you're always paying the interest first. And I know are mostly interest. You're still paying some principal, but it's mainly interest. You're making very little principal payments at the beginning. So you can assume 50-year mortgage, you're going to take a lot more time to build that equity up. So unless you're in an area where house prices are just going up exponentially, which they aren't really exponential right now. So that's not a worry. You're going to have to stay in that home longer, or you might take a loss on the cost that you put into getting your home. Second, on a 50-year mortgage. Now look, when I price a 40-year mortgage, the rates are always higher than a 30-year mortgage. So if you see anyone out there saying, oh, comparing apples to apples with the same interest rate, it will not be that way. Most likely that 50-year mortgage is going to have a higher interest rate. So yeah, over 50 years at a higher interest rate, it's still going to give you a smaller reduction in your monthly payment, but you're not getting a 4% rate on that right now, or 5. It's probably going to be closer to that 7 range. Now, obviously I can't price it because it's not a thing yet, but if I were, I would not be surprised to see it higher than a 30-year mortgage. And then we have portable mortgages as the new thing we're talking about. And, my first thing about that is it does not help first-time homebuyers. And as somebody, look, I help all buyers, but as somebody who specializes in helping first-time homebuyers, because it is a passion of mine, it will not help them get into the market. And that's what we're talking affordability. We're talking about affordability for first-time homebuyers. Second, with a portable mortgage, you don't get the same 3% interest rate on a new $500,000 home. That's not how it works. For example, if my home right now is worth $300,000 and my mortgage and balance due is $200,000, I will sell my home and make $100,000, give or take minus my fees I have to pay, obviously. If I'm going to go buy a new $500,000 home, which probably is how much it would cost to build my home now if I were to go find a new one, I can move that $200,000 mortgage over. I can put $100,000 down for my down payment because I made $100,000, but I still have to pay another $200,000, which means I get a new mortgage for that amount. So to get that $200,000, you might have to get another mortgage, and maybe they're blended together. So you might have your old interest rate plus a market interest rate, 2 loans blended together. So you will not still have that 3% rate. It will be a higher rate blended with today's market rate. And that would be a whole new loan together blended. Or you could take out a second component, which is basically like a second segment loan that you would have on top of your original mortgage. So then you would have 2 loan payments to make. And you would pay that loan, that $200,000 at today's market rate, while you still have your other $200,000 loan at your current, say, 3% interest rate. So regardless, not helping first-time homebuyers. Second, if you want to move into a home that's worth more than your current home, you're still going to have an increase in your interest rate in some form or fashion.